Assalamu alaikum and good evening. My name is Ahmed Darwish. I'm the head of digital delivery and digital solutions in Bank Albilad with almost 33 years of experience in IT, digital and business, especially the corporate business where we have this talk today about collection and debtors and so on. So happy to be here and thank you so much for having me here today.
Assalamu alaikum. Good evening for all. My name is Roshan, working as a CTrO. Then my main role is like design digital journey, end-to-end digital journey, from loan lending to the collection. And ensure that it is regulatory compliance and cost effective, and finally will ensure that it will support the revenues. So like the digital journey when we implement in collection side, it's like not just technology upgrade for the calling, automatic calling or SMS or anything, not like that. We need to ensure that it will be result like a recovery improved or control the NPA or NPL. And finally, the company should be benefited from out of this technology implementation. So this is the area I'm currently working on it.
Okay, thank you, Roshan. So my name is Mohamed Fathy. I'm the head of products and digital transformation at Saudi Fransi for financial leasing. Actually, I come with more than 18 years of experience in digital world. I have worked in multiple banks on digital transformation initiatives. And I came here to Saudi Arabia like 2 years ago, where I have contributed in building and launching the first digital lending solution for D360, and currently I'm working on the digitization and transformation for JB, where we want the company to grow and scale and get more market share. Thank you. So I think now we're going to have a chat about how can we work on digitizing the collection processes, and as our first question, and maybe one of the biggest mistakes that most of the companies do is working on digitizing a solution after building the product. So if you want to digitize a collection, most companies build a lending product and then they think about how we can collect it. So I think one of the first questions that we need to talk about is what could be the strategy that we need to work on for collection before even building the product. So what do you think, Dr. Ahmed, about this?
Yeah, I think this is very good question because going to implementation or design of a solution and trying to find a vendor to work with and IT start taking over before setting a strategy is a big mistake. We should first set a strategy for the collection exactly by first knowing who's the end user of our products. And part of the design thinking approach that we are using today is to use empathy as a first step to think about the user needs and put yourself on the user side to make his life easier and make the solution very convenient and less hectic, 24/7 reachable by the end users. I think this is one of the key aspects that should we start with when we are setting a strategy. And I think that point could be one of the first priority things that I might be think about. What do you think, Roshan?
I think, when we discuss about the NBFI, the business verticals are different, like microfinancing, or loan lending, or a BNPL.
So can I just get your mic?
Yeah, is it okay? Yeah. So when we set the strategy, the company requirements may be different. Some company, they wants to control their NPA or NPL. Some company wants to control their cost. Some company, they wants to maintain the retention for the customer. Then, so their priorities are different. So we need to set the priority when you are setting the strategy. Once you set the priority, then you have to align credit risk, customer care, collection, operation, all these functions. has to align this strategy, then we need to think about, okay, which solution, how it will be, benefit for to achieve this particular goal. Then one more thing, when you set this goal, you need to set the KPI for all of this. So you can measure, are we achieving or not? And do not go for one-time implementation. Go for the phase-by-phase implementation.
Okay, so just adding to the valuable points that you have added, that when we are setting a strategy, we need to be thinking first about who are the customers that we are targeting, what channels can we get them on, what will be the highest probability that we can communicate with this customer and have higher response rate from them. That's one part, and this requires understanding your customers and have deep analysis on his behavior and what channels he's on. That's one part. The other part is we need to relate it to the type of the product, where if we're talking about personal finance or financial leasing, it's completely different than if we are setting a collection strategy for a product like buy now, pay later or microfinance, because they are different. So we need to understand what is the product, who are the customers that we are serving, so that we set this collection strategy, and then comes what will be the technology that we are going to be using, or what will be the processes and operating model for this. And last but not least, we need to define the ROI on the investment that we are putting for the solution for the collection, so that we can know that we are investing this amount of money and we are going to get this return on investment for using this technology. Otherwise, it's not going to be a best choice to select this technology. So this will take us, I think, to the another point which is very important, like what could be the key differences between a company which is working on products like personal finance, auto lease, or maybe real estate, vs the companies which is launching new products like buy now, pay later, which is now booming in the market, also subscription lending or microfinance. What could be the differences between setting or working on a collection, digitizing the collection for this vs these other two products?
Yeah, maybe before we all share the experience, I think one of the key elements for the buy now, pay later companies and solutions, and even for the investors, is the turnover. So why the companies like 𝗙𝗵𝗿𝗀 and Tamara is always getting fund? Do you know why? Because they have a turnover of 3-4 times a year. Yani when they lend or finance like micro lending or microfinancing, what is actually happening here? The customer has to pay the installments into either 3 months or 4 months, and the money is less than, let's say, 5,000 riyal. So what's happening here? The money which was lended or given to the customer as microfinancing is gonna come back in within 3 months, 4 months, which is the normal average or turnover of the buy now, pay later. So the money can be reinvested in the next round with another customer, again after 3 months or 4 months. So this means that for the investor, my money is making 3 or 4 cycles per year. Okay? This is for any investor is very attractive, because normally when we do investment, everyone will be asking when I'm going to get my money back. Normally it's annual revenue after 2 years, after 3 years. In the case of buy now, pay later, the key factor here is the high turnover, which is making the financing and being a shareholder in any of these companies is very attractive and very profitable for all. This is one of the key differences which I can give. I think you can talk about your opinion, then maybe I can continue at the end.
Yeah, I think also adding to what Dr. Ahmed has mentioned, I think there are some major differences in setting a collection strategy or digitizing the collection for a conventional lending product vs the other models like buy now, pay later. First of all, buy now, pay later usually has smaller tickets, higher volumes, and VS the personal finance, it's usually having the volume, the amount of finance is higher. So and it's not that big volume, same like buy now pay later. So that will take us to the point of what collection strategy will I be doing and what collection processes will I be doing. It's mandated on buy now pay later, or maybe it's critical for them to have a digital, most of their collection activities need to be digital. They need to enable self-service platforms. They need to keep sending reminders, because the cost of getting the traditional collection activity via a human or a company will not be collateral. This collateral might be the asset itself, or it can be via promissory note. Buy now, pay later, they run on soft checks. They make a soft credit check, and they don't have a collateral like a promissory note due to the cost. So that means that their collection activities and strategy need to be completely different. They need to be engaging the customer, and they need to be available for the customer and close to him through the channel that this customer is available on. Otherwise, they will fail in their collection activities.
Yeah, Roshan, would you like to add here something?
Actually, the point what you mentioned is the ticket size is less for the BNPL, and maybe cash loan ticket is high though. So the strategy for the collection activity and the cost of the collection is different. And different channels we need to use. That's agreed. Say like a human channel is much higher cost than the AI channel. When you go to AI channel, AI voice channel, then you can consider the IVR, and you can consider the SMS. So when for the BNPL, customer portal, this all are benefit for them. So no need to use the human channel for that. So that area is fully aligned. Like you have to think about how much your ticket size, and you need to think about how much cost you need to invest for this recovery is important. Then what is the other point you mentioned?
I was talking about the collateral, like buy now, pay later, and this type of small loans is not having a
personal
collateral.
loans actually depending on the salaries. So normally if they have a regular salary, they will get the loans, and collaterals coming in normally in the SME side. So that collection strategy again is a different thing. So yes, you had to think about what is your product, what is your cost of recovery, then design your plan.
Yeah, maybe I just need to add one point from bank perspective, as we do financing, which is, as you mentioned, high value of personal finance, home finance, auto lease. These are normally given by also credit risk checking and scoring. And we normally have a past due process to make sure that whenever a customer fails to pay any installment, that we put some booked value in his account. So whenever the money is coming, we can collect our money back. This is not the case of buy now, pay later, because buy now, pay later, they just keep trying several times with several failures. Then I think they can stop, or it's not a continuous process. Like when you have the oversight on the customer account, where you can insert a booked value to make sure that the collection is going to be received next time when the customer receives his payroll or any transfer to his account. This is one of the big differences also.
Yeah.
Another open banking side, there is another advantage. Like that this guy, when he will get the salary, normally the government people are getting on 27th, like which time they are getting salary. So no need to do recursive calls or messages. You can directly link their card or anything in particular time and do the fetching the same time. So there is no difficulty for the customer, and that when you need to fetch this, and when you want to call him.
Yes.
So use some AI for this area. This is a very good area actually to activated and supposed to every companies.
Yes.
Yeah, so I think this will also let us discuss another important point, which is what could be the utilization of open banking and how it could be benefiting the collection for buy now, pay later, or personal finance, or whatever product. I think it has a big value and multiple utilization and use cases.
Correct, and especially Mohamed, with the new framework of SAMA, which is coming now into effect, is the payment initiation services. where we can give the customer the facility to give consent or long-term consent to collect the installments from the customer account, and the customer can, during the consent, select which account he will be able to use to fund the installments, and that installment should be maintained in the bank record for that long period of time. And whenever there is a request coming for the installment, it will be executed directly from the customer account based on that consent which was given long time back. طبعا this is enhancing the way of direct debit which we used to have in the market for decades. Now it's becoming by open banking, so you can even select which bank out of your 3 banks, 4 banks that you have accounts today on, and also it makes sure that the installments are paid on time without the lender himself need to follow up on that with the customer.
Yeah, and I think open banking, it can be having some more use cases even before collection starts. Like usually we use open banking first of all to get the customer account details, his spending behaviors, his income, even his salary flag, so that we can know that this account is the one which is having the customer salary. We check the frequency of this salary. Is there a variation from month to month? This helps in the credit scoring for this customer, which is part of the collection later when the customer get the finance. Also, the solution you have mentioned is very important, since it can help make the collection more automated, and also it's like simply I can get like a direct debit in any bank in Saudi Arabia digitally, seamlessly, without getting the customer to sign and then have manual verification. No, it's just a simple consent customer will give, and this will enhance my collection operation and activities, and it will also open some more doors for customers to get finance, because usually conventional banks are just giving for salary assigned customer, and there are big market that it's untapped yet due to not able to score the customer properly. And I think open banking is one of the use cases in both credit scoring and for collection. Yeah.
Roshan, I think you touched this point in your previous discussion about the open banking. You can see where the customer salary is being deposited. So I think that can be also used for the, let's say, preference account. So when we have a buy now, pay later, or a long-term financing, we can redirect the customer to that account, and instead of that keeping the customer or having them taking the option to go to another account which they don't regularly receive the payroll on. So I think this could be also a very smart way of redirecting the customer.
Actually, another benefit also there. When you are fetching the data from 𝗏𝗏, maybe sometimes you will not get the salary details. If they have an open banking, you can check the account details there and give you can sanction the loan. This is another, benefit also there for the open banking.
Yes, this point is important also, because most of the lending companies and banks are working on just income credit scoring vs the salary. However, there is additional income that can be scored via checking the customer balance, bank account, and checking his balances, because he might be getting an additional income that we can lend this customer based upon it. And we have a lot of use cases actually, maybe some of the Uber workers or other drive hailing companies. So this is very
I think adding to what you're saying, especially for the case of captains of Careem and Uber, where we are dealing with them actually now in the bank. So it is something like you can trust that person who is working, let's say, with Careem for 5 years. You can see the income and how much money was transferred to his account based on his trips, without you have to get this information from Careem or Uber themselves. So it's a very valuable point. Maybe one of the last point I maybe add to this part is that now banks start giving financing without having the transfer of the salary to their own bank or organization. So because they can see now that you are getting your salary in a regular basis in another bank, so they just need to get your consent to see that bank account, and then they can offer you the financing and making sure that you will be able to
Actually,
pay.
financing companies no need to transfer the account there. Yeah.
So another important topic also that we can talk about related to collection, which is now a hot topic, which is how can we use AI in collection? Like this becomes a very hot topic, and we don't want the fancy word of using AI. We need like to know how can we practically utilize the artificial intelligence in collection by real use cases. So this is an important topic also we can cover.
When we start to use AI, actually we need to start from the beginning. Like that this customer, see, most of the financing companies are facing the problem when you are making hundreds of calls, maybe 25% of the people pick the call. So when you start the AI, that this customer normally at what time they will pick, so you need to call in time. Another thing, when you are doing the segmentations, that this customer is regularly paying, so no need to disturb him by making lot of calls or lot of messages. So you can do all this segmentation based on the AI, the first part. The second part, when we comes to the collection recovery side, you can predict exactly these are the customers upcoming, they will be default in next month or second month because the history for the same type of customer. So you can analyze this and you can predict the NPA for the maybe next upcoming months and control this customer early before they have become the default. So these are the area you can apply your AI. Now when we comes to the recovery part, yes, you can use AI voice agent. As you mentioned, should be an empathetic way, not to just, AI you can set aggressive call, angry call like this. Don't set aggressive call because we need a retention. So any customer is angry or something, you pass to a human in the loop, transfer to them. So these are the area very important when you are implementing AI solution.
Yeah, maybe just to add small points as the precaution or prevention. We have used AI one time with an AI company, and we trained the model using about 10,000 records of the previous or the historical data that we have for customers who got personal finance and who failed and who fulfilled his commitment. Training them by 2 sets of 3,000 records each. And we noticed how the accuracy is getting better and better. It was about 82%, which is very high in terms of AI modeling and so on. And then we tried the actual model with 4,000 records.
Oh.
And we have shown how much false positive and false negative records we got. And طبعا we got that issue of the biasing of the AI model because it was actually trained somewhere else. Then we just, trained it in Saudi, but it wasn't enough to have 6,000 records only. So AI can help you to prevent giving financing to failed customers. However, it's also a challenge that you can get better accuracy for it.
Yeah, I think it needs a lot of enhancement and localization. Also localize it to the market you are in. Even in the dialect this AI, agentic AI is speaking with, running it on your data and training it well so that it can provide, and the model keep improving. Another use case is the predictive analytics, that maybe you train this model to predict which group or segment of your customer can be defaulting in the future, and this to prevent that from the beginning, and also to at that point maybe you stop lending these customers.
Exactly.
Yeah.
And I think we came to the end of the discussion.